Hi guys, thanks for tuning in to another episode of Nuggets News. We're here with our friend Kyle. He returns. He's actually got a job at Nuggets News, so very special guy. But we're going to go over all the macro charts. So we're going to tie together the stock market with crypto, currencies as well. We're going to look at even gold and silver. I think is an interesting point. So on high time frames, it's just such an important, I guess, macro stage of where we are with everything. And on low time frames, we're probably looking for crypto to maybe find a bottom, and if it doesn't, it's at a key level where it could break down and get a little bit more nasty. So we'll go over all of that today. But Kyle, how have you been?
Mate, pretty good. It's good to be back on the show. It's been a couple of months or something like that. But yeah, it's good to chat to you again. You've been a busy man.
Time flies, yes. And yeah, thanks for helping us out. Kyle's been doing a report as part of the Collective Shift platform, which I believe pro members get. Plenty of updates. You've probably seen him just about every day posting updates in the group and that as well. So you enjoying it all, mate? And you're full-time crypto now?
Yeah, been full time for a long time now.
Okay.
Full time almost now for 3.5 years, 4 years really.
Okay.
Time does fly.
Um, what I guess this is for my knowledge as well as everyone at home, but during that time you've been full-time crypto, I know you're sort of helping Troy or Rahman a bit. You got your own little group, but yeah, what does that look like? I wasn't aware that you were like full-time just on one thing. I thought you were doing like lots of little bits and just part-time crypto, but like what's your crypto full-time journey been like?
Well, I started my own group in like 2017. Well, I started trading crypto originally early 2017, and then I was in a couple of other of the Australian crypto groups, and I was like, this is actually not the greatest content. I wasn't in your group at the time,
So this is
or
a free Facebook group you're talking about you started?
yeah,
Yeah, okay.
pre-Facebook.
Yep.
And then I was like, I think I can add more value to people than what these guys are adding. And, it was a very toxic environment in some of the groups. We won't mention those groups.
Yeah.
And so then I started the crypto group because everybody was just asking me, all my friends were asking me all the time about how to trade and stuff like that. And I went to university and studied finance, and I'd done a bit of trading here and there, and then really got my teeth stuck into it a lot more when I started trading crypto. But, I knew enough to teach people very basic concepts, which are really the key to trading anyway, let's be honest.
Yeah.
And so I was making calls and telling people, this is what I think is going to happen in the market and stuff like that. And so I started the Crypto Collective group. The group then became the Crypto Collective. And that was 2017. And then I ended up teaming up with Roman towards, I think, end of 2018. I started the what was called the Altcoin Mastery course. And then I teamed up with him in the Crypto Paradox group. And we threw an event at a restaurant that I used to own, actually, which was a bit of a laugh. And we became really good friends. And then I was talking to him about maybe partnering to do a bit of coursework. And then we teamed up and we did Market Mastery. And then, became more involved in his group, became more involved in your group then because you guys were such close friends. We started chatting a bit more. And then Roman ended up retiring and left me with everything to carry on Crypto Paradox, which is, got 30,000 members in it or something like that. So, now I've sort of brought together a bit of a team with, Travis, and, we're doing the DeFi Mastery course now. He's great. And then also Dario and stuff like that. So, we've got our little Discord group as well, which we ended up merging with Troy's group as well, or Roman's group ended up merging with ours. So,
Okay.
it's been quite the journey, but it's been really enjoyable, and I love it. Love now working with you guys as well. Definitely out of all the communities that I'm in, the people who are the nicest, I definitely find are the ones in your community. 100%. Most interactive. I think enjoy the conversation the most out of those guys, and they're very well informed. That's for sure. So you've done a great job building that community, mate.
Yeah, you can tell the guys that have been through the whole market cycle, like people that were beginners are now almost like experts helping the next round of beginners in our group. But yeah, there's always a little bit of emotion when markets are either going up a lot and people have made money or missed out on money, and then there's always anger at the bottom of the bear market. So you got to enjoy running a crypto group, don't you? But no, your course that you've done is a lot different to every other course, and I'm not just saying that. Like I genuinely learnt like new trading, like patterns and everything when I just had a quick flick through it. So that's been a big hit with people. And I think the sort of, if you do a few different courses with people that have got complete different styles, it's just, well-rounded. And that's kind of the way that I trade, almost just trying to use a little bit of everything. And we've had Smart Contractor on, who loves his Elliott wave. So I just think you can never stop learning in the trading world. But it's the meme that you see floating around about how you learn the basics, like, horizontal lines, and then you go through all this stuff, and then you end up going back to horizontal lines after years of trading the basics.
100%, yeah. I actually made one of those memes and put it into our course. So
you know exactly what I'm talking about.
Yeah.
Okay, let's bring up the charts. I'll share my screen to start off with.
Yep.
I guess people kind of know the way that I'm thinking about things at the moment. I would just love to have a couple more periods of cool off. So we've only really had, we got 2 weeks there, a little, not even 1 week pause there, one there, and we're currently in our second week. But I'm just overly cautious because things have been going parabolic. We haven't seen enough of the time to reset. So things like, I think this is a 30 moving average, but if you go throughout history in Bitcoin, it tends to revisit the 200 week moving average at the end of the cycle. And look at that, it's not even 15K. The 200 day moving average down here, 27. So we're just so far from all the moving averages. We're really overextended just about every way you look at it. And if you start to look at some of the on-chain data, we're getting towards I guess levels that would suggest a peak in previous market cycles. But what I would say is that the last few weeks can be the biggest in terms of the percentage move, the absolute move. So when Bitcoin breaks $7,000 here, 1, 2, 3, 4 weeks later, it's at $20,000. So when I say, sort of getting towards the end of the cycle, or these indicators are getting stretched, that doesn't mean that in the next 4 weeks we can't go to 100K, then chop around for months and months and just correct. Alts could be flying while Bitcoin's range bound. So it doesn't mean the bull market's over. It's more of a sort of mid-cycle correction that I've been almost hoping for, because I don't want it to keep going up in a straight line, because that's going to end up in a very nasty crash if we go straight to 200 or 300K now. Then we'd have an 85% correction that would last a couple of years, and I don't think anyone wants to endure that.
Yeah, I definitely agree. We do need to cool down a little bit, that's for sure. And I think possibly, what happened last week with the pullback, that I believe, we were chatting about this just before we went live, but I believe it definitely had something to do with that, false $1 billion transaction that ended up being moved to custody by Gemini from BlockFi, and everyone thought it was a massive whale coming on to sell. And yes, if you look at the transaction, people definitely started selling as soon as that went through. So, one thing with all these people looking at so much on-chain data, we need to be careful of is possible psyops in the future from whales, making everyone think that they're dumping, and then they come in and clean everyone out. So
yeah, absolutely.
Let's see. But to be honest, the weekly chart doesn't look great at the moment.
Do you want to share your screen at all? You want to share your charts?
Yeah, I'll bring it up.
Yeah, definitely agree with what Kyle's saying there. And I'm also kind of worried about the fact that so much of this great data is out there these days. Everyone is looking at it. All the YouTubers are telling their audience. So even the general retail public that aren't subscribers and getting the alerts, within 24 hours, they've probably heard about it. And so at the moment, we can see that very few people have sold. Everyone is hodling, strong hands. Then we got a little bit of a twitch the other day when people got an alert that a whale had deposited, and we had a pretty sharp, quick sell-off. And so if everyone's playing musical chairs and everyone is just waiting for the music to stop, then I just worry what happens if a meaningful amount of people run for the exits at once and order books are very, very thin. God, it's going to be volatile with that 100x leverage out there.
That's it. I definitely agree with that. So what I'm sort of looking at the moment here on the weekly is we've got a potential shooting star set up with this bearish divergence. I'm going to put in a small caveat with bearish divergences. I'm not the biggest fan of a bearish divergence in a strong uptrend, because if we go and look back at previous market cycles, you'll get maybe 2 out of 8 bearish divergences actually play out for a profitable trade. And yeah, there might be an 18% pullback or something like that, but so you have to be aware of them, that they're there. But for me, it's not the same as when we're trading a bullish divergence on the 4-hour or daily when we're in an uptrend, because with divergences, the way that you want to be using them is you want to use it as a counter trade trend. So if we're going up, right, we want to use the divergence, which is when it's telling us when it's oversold. So it tells us when to get in, and then we push higher, right? When we're coming down, we want to be looking for not bullish divergences. We want to be looking for bearish divergences when price goes back up. And then, you get the bear div, which would look something like that, and the indicator would make a lower high. And then, we're looking where to short again from there. So that's why I don't really pay too much attention to bearish divergences, but you have to be aware of them, that it could cause a longer term correction. And so the main thing I'm watching for is just the very simple candlestick pattern, which is the shooting star reversal. So shooting star reversal is a strong green candle like this one here. And then you have the doji top in the middle. And then that's followed by a red candle after the doji top, which needs to close more than 50% of the way down of the previous green candle, right? So just to measure that, we can always just use our Fibonacci retracement tool and go like this. And so if we close basically under 55K, that would be a confirmed possible top signal, all right? And, so that means that bots, for example, and larger players and stuff like that might be more inclined to be looking for selling opportunities rather than buying opportunities, right? And that can cause a change in the trend on the lower time frame. So that's one of the big things I'm watching at the moment. What I really don't want to see is us close below 50, pretty much 51, right? This level here, right? If we get a bearish engulfing candle, so let's just say it closed like this on the weekly, I would say that would be very bearish for me, and I would be expecting us to definitely come down and probably test 45 in the next week and test the low down here, which would also be the monthly open. I'd expect to probably get at least a short-term bounce from that, and then maybe we go into a longer-term sideways correction or something before we push into the middle months. On the lower time frames, though, the news is a little bit better, in my opinion. It does look like Bitcoin is trying to set up a falling wedge. If you were on the collective shift report that I did at the start of last week, we were talking about this power candle block through here, which is from one of Roman's indicators, which is really helpful. And these are just basically highlights really important areas in the market. And so I like to highlight these ones, and that's where you see all the lower time frame ones, you can't see them, but the daily ones are definitely quite important. I'll show you an example of back here when we were trading this falling wedge, and this is when Elon Musk changed his profile on Twitter to Bitcoin, all that sort of stuff. It actually gave us the perfect entry on the lower time frame through here. So that was a really handy tool that I used at this point. And at this point, to get into a long entry trade, which I managed to hold for this whole swing high. It's actually been the best trade that I've had, well, definitely this year, but of the market cycle so far. So those are the sort of trades that I really like, and the market does like to come back to these P blocks. So possibly we'll come back and revisit this one here, but maybe not. But at the moment, this one is acting as a resistance level. And so in the collective shift update, what I said was it's either going to, this P block was getting put in at the time. I was saying we're either going to rally from here and then come back and put in a candle similar to this one here with a long tail at the bottom and a square body. It's called a bull hammer. And from that, I would be expecting us to push the upside. And these are the resistance levels that we're looking for, right? On our major fib levels. If we broke down below it, I was expecting us to come back up and get some wicks into the P block, and then if we close below, that would be a confirmed bearish retest, and then roll over. And that's exactly what has ended up happening. We're going to that deeper correction. Now, if we go down a little bit deeper onto the lower time frames, we're starting to get quite oversold on the 4-hour. Now, every time Bitcoin has been oversold on its 4-hour time frame for over 6 months, right, it has been a very good time to be buying in. So unless that changes, which means we would have a change in market structure and we would flip into a downtrend. This is definitely the time you want to be paying attention for possible really good, strong buy entries that you can hold for a solid 4-hour swing, which, a good 4-hour swing can go anywhere from 2 weeks, 1 week to 2 weeks. This one was, a solid 2-week swing from its bottom to its peak. They're nice trades. You get a fair amount of time to be aware to get into it, and also you got a fair amount of time to take profit on the swing high. So I'm expecting most likely that this time it's not going to be different. And if we do get a 4-hour bullish divergence in here, in a bull market, they have over a 90% strike rate of being profitable. So I'm definitely going to be getting long on that bullish divergence if we do end up getting a bull div like this of some sort, and the RSI does something like that. Sorry, I've done it the wrong way. The RSI does something like this.
So the 90% strike rate is a bull div on the 4-hour in a bull market. Is that correct?
Yeah. And so to play that correctly, I'll just imagine this is where the price comes down and closes there, and then the next candle is green. We would have our stop loss underneath the closest wick, right? Which you got a pretty good level through here, right? So we want to make sure our stop loss is below that. And I'll probably put it below this level through here because it's a nice, pretty clean level, bit of an order block as well, right? And give it a bit more breathing room, so a nice 3% move. And then you would be hoping that this ends up playing out the falling wedge straight away without coming back and putting in another one like this, which sometimes can happen, which is what ended up happening with this one. We put in the bull div and then we came down, took everybody's stops out, and then it finally went from there, which was a bit of a pain in the ass to trade because I got in here and I thought I had the prime entry, and then it wicked me out overnight and I had to catch it a little bit later, but that was a really nice entry anyway, getting on the breakout of that one, and ended up being quite profitable because when I see this sort of price action happen, okay, we've had 3 bullish divergences in a row, 3 drive bull divs are very strong indication of reversal. And generally why that happens is because you've got somebody buying, which causes that divergence. You've got a large player buying that causes the divergence, and you've got lower time frame people selling. And then especially if you take out people's stops, like we did back here, then the reaction usually is quite strong because like me, I got stopped out overnight with this wick down here. And then I had to buy back in, which pushes the price up, and then you start to form the reversal and everyone panics. Like, oh, I've missed the bottom. And then, they have to chase and that pushes the market up. So I'll be looking for something like this. And then my stop loss will be below here. And I'd be looking for key levels, which is our macro fib level, which is the 3.618 at 64.5. And then the 4.236, which is 57.109. So those would be my 2 take profits for this trade setup. Yep. So that's the main one that I'm looking for at the moment. And if that does play out, I think all the alts are going to bounce and rally as well, because there's a couple of really nice looking altcoins, that are in really big bull flags at the moment. So what we don't want to see is for this setup to fail, because if this fails, it's what you were talking about before, right? Let's imagine we paint a really perfect falling wedge like this. We get the bullish divergence in here, and everything is perfect and really clean. And then we end up rolling over from that and dumping. And then, we start to see things like on dot, this really nice ascending triangle starts to fail and starts to roll over. That could be a very strong indication, if we start doing stuff like this and then it fails, and that could possibly be a distribution top, right? So those are the things that I've definitely got my eye on at the moment for potential signs. Like if the key top altcoins start to look like they're failing their bullish setups and Bitcoin starts to fail its bullish setup, that's a really strong sign that we could be possibly about to have a deeper correction or a reversal. If that did happen, I would be looking for this 40 level to hold, which is just the previous swing high, right?
Yes. And I think a lot of this might be dependent on the stock market and the Fed. Like, I think everyone is just worried that the party's over in terms of the easy money could stop flowing. And if they get a sign that it's going to be bigger and better and continue, then everyone will be happy and speculating. But if they think that that is going to end, then a lot of these institutions that invested in Bitcoin will have to rebalance. They'll have to raise their cash levels. Their Bitcoin could be up 1,000%. They'll have to sell some. So it's all important, guys. It's all intertwined. And the stock market doesn't look that healthy. And basically, Wall Street is holding the Fed hostage at the moment because they want more easy money.
Mm-hmm.
Do you want to bring up the S&P 500?
That's what they're all over about, right?
Yeah.
Yeah, I've got it up right now. Can you see?
Yeah. Can you just zoom in a little bit? It's tiny. That's all. Yeah, that's better. Yeah.
So this is the daily time frame. Is that better?
Yeah, that's fine.
Okay, cool. So this is the daily time frame, obviously at the moment, and the most obvious structure that we're in is this broadening ascending wedge, which is Roman's favorite setup to trade. Actually, the broadening descending wedge, which is the same thing in the opposite direction. Obviously, when you're coming down, right? So it's getting wider like that. But this is broadening ascending wedge, and typically, these can be a top pattern. But one of the issues I have with something like this is the stock market loves to just grind up, and it looks like this a lot of the time, right? And then just keeps grinding higher. I definitely can see a pullback to the 3.8 or 3,800 level, I should say. But it might do the same thing. I think if we do have a big sell-off, the really key area to watch is the previous swing high, which was at 3,580. That will be a really interesting one to watch, because if something happens and we bearish retest like this and start to crash towards a previous swing high, I would expect that to hold pretty strongly, and that's where you might see the Fed start to step in. And if they don't, and this ends up rolling over, and we sort of do a bit of trading underneath here, come up and bearish retest that, then you start to look really bad for a much bigger downside correction. And I mean, we all remember what happened with the coronavirus dump, where we had this huge sell-off, and like you were saying before, everything's interconnected now. It started really pulling Bitcoin down with it as well. We had that huge crash in March. So, it's pretty much just over a year from that now. I don't really think that the timeline of last March is when we dumped, so we're going to dump again this March. There's been a bit of chatter about that on Twitter and stuff like that. I don't really think that that's valid. It's a completely different scenario, but we'll have to wait and see what happens. And for me, I'm just waiting to see what the market gives us in terms of the next setup. Like, mainly because I'm not really that interested in holding SP 500 futures or anything like that for like a long-term hold. I'm just looking for the next key setup that I'm very confident on. The market is going to break one way or the other. So for me, if this ended up coming down and we've got a bearish retest on here, that would be the entry for the broadening ascending wedge, right? And if something like that started to happen, that would definitely make me double check all my positions in the crypto markets, because that'd be a very bearish sign that something's not right in the market. Maybe 10-year yields start really pushing higher again. And if the dollar starts really picking up as well, that's one to watch for sure. If the dollar starts picking up and reclaiming key levels, we need to be a little bit careful, because the dollar is also just breaking out of a really long-term falling wedge, pretty much from March last year. So it's been a year in the making almost, and it's starting to put in a bit of a bull flag here and starting to flip into a bullish trend again. So we've gone from making lower highs, right? So this is one of the highs, right? This is a lower high, lower low here. And we're putting a high, right? We're putting a higher low here. So because this was a lower low, this is a higher low. And then now we're putting a higher high. So we're sort of starting to confirm this is flipping into an uptrend now, especially if we break through the last swing high through here, right? It sort of like confirms that you've got two higher highs in a row. And I don't want to see it reclaim this long-term trend line, because if we go out onto the weekly time frame, you see how far back this goes, and it's from about 2011, right? And so bounced off that, bounced off it here, and then we ended up doing a really nice bearish retest of that and then dumped back to the weekly order block, right, which is just the key level through the swing highs here, right? And now we're bouncing off that. So there is a decent chance that all that we're doing right now is coming back up for a bearish retest of this long-term trend line before it starts to break back down again. I've always said, for over a year now, that this is probably the range that they want to be back in, back where they were between 2008 and 2015 before it started to take off and push higher, because with a really high dollar, it does put a bit of strain on US exports. It's better for importing, but you want to make stuff in America. If you're an American policymaker, you want more jobs in America, you want more manufacturing in America, which means people need to be able to afford your stuff that you're selling. And a higher dollar makes it a little bit harder. So it makes sense to me that they try and drive the dollar a little bit lower, because, the whole thing is all about jobs, right? So.
And again, if that did go up to retest, that would suggest that Bitcoin and like even gold, as all assets really, have got some further downside before they all get a bounce.
Yeah, exactly. Gold's a really strange one at the moment. I do feel like Bitcoin is definitely pulling the bid out of the gold market for sure. And I feel like a lot of people, like a lot of funds and a lot of high net worths are selling their gold, their paper gold, their ETFs and stuff like that to buy Bitcoin. It seems like that's a bit of a trend at the moment. So that's probably putting a bit of downward pressure, and also the narrative as well. Like, Bitcoin's been outperforming so much, pretty much since August. Like, it was when Bitcoin started, really starting to perform the back end of the year, and gold sort of hasn't really done that much in a long time, right? So I wouldn't want to see it break below this, 1682 level. That's going to get really ugly if it makes a new low, but I wouldn't be surprised if we did something like this, put in a big bullish divergence and then reclaim that level. I mean, these are sort of my favorite trade setups: when you break below, take out everyone's stops, everyone panic sells, and then you reclaim the key level. It's just usually that leads to upside. If we can get that to happen on like the daily time frame, weekly time frame, I think that's going to be a really strong entry for a move higher. But there's no like really strong pattern set up or anything like that. It's below the daily 200 MA. I'm pretty sure that's 200, yeah. And looking pretty bearish. So
I agree that there's just money leaking out. And once again, big money, smart money, they might have 5% allocation to gold, and they're now saying, hey, let's go 2% Bitcoin, 3% gold. And so that requires some selling of gold. So this is all, it's not saying one's better than the other. You've just got to think about who's on the other side of the screen. Like I always say, who's buying, what money are they buying with, are they rotating? Paint that picture, because it's crazy to think that Bitcoin has got to a point, a maturity as an asset class, where it is affecting others and even taking some money or taking the spotlight from similar or alternate assets.
Yeah, I mean, it's crazy to think, a couple of years back that we'd be taking the bid away from gold, but
and silver's held up better. I think silver is probably setting up for the bigger bull market of the two.
I think so as well. Robert Kiyosaki's been pushing silver pretty hard for a long time. Look at the year that it's had. I mean, that was such an amazing rally after it swept the lows here. I mean, this is what I was sort of talking about on gold just before, right? You've got a really nice key level. You sweep those lows. When you get back above that key level, it's a really nice entry. I mean, obviously this played out super bullish. You don't always get it playing out that nice, but you can see on this candle here, it's a weekly time frame as well. So there's a lot of lower time frame action in here. It comes back and retests that key level, and it just never looks back. So like, those are the type of entries that I always really look for. And that when you sweep the lows like that, I mean, if you guys have studied Wyckoff trading patterns, Wyckoff accumulation, this is basically what it's all about, right? The bigger players in the market force everybody to panic sell by dropping the market below the previous swing low, while they're there with huge buy orders, and they start buying it back up and then push it back above, and then you get the retest, and then it pushes from there. So we saw something really similar happen in IOTA recently, which when we get back onto altcoins and stuff like that, we can take a look at that. But sticking to this silver setup at the moment, it just looks like it wants to flag out for a little bit longer maybe and do something like this and then go. But who knows how long that's going to take. I saw the other day that the Perth Mint has run out of silver, and there was that whole silver squeeze narrative and all that sort of stuff going on. Who knows if eventually it will play out? But I definitely can see this coming back to 35 and testing 43 as well. Like, this looks like strong market structure. Until this weekly time frame bull flag fails, you have to expect that most likely it's going to head to the upside and test the previous highs. Because if you look at gold compared to gold is made a new high, right? And silver is still lagging so much. So it would make sense that eventually it's going to go play catch up and come back to the previous all-time high at least, and test this 43 to 50 sort of area.
You mentioned IOTA. Do you want to just quickly show us,
Yep.
or any other, the gaming coins have been on fire. They, again, are setting up like they want to go higher. But we are at some pretty big market caps now, and these are all the things I've just got in the back of my mind again about the liquidity and who's doing what.
Right, definitely. Well, Mana's a really good one. It's up 7% on the day, and that to me just looks like a perfect bull flag, right? So for me to be bearish on this, I just can't until it fails, right? But if it does do something like this and comes up and wicks this swing high here, right? I'll zoom in so you guys can see. If it takes this swing high out and then we close back below, right? Maybe come up for a bearish retest or come up for a bearish retest in here, that's sort of the position that I would be looking to sell, or even, you could cover by leverage shorting for a little while if, you've got spot holdings and you don't want to sell them for tax purposes or something like that. You just put a leverage sell on here and then you can cover your position. And then if we definitely get below this level here, that's when I would start to get a little bit more bearish. But then the other thing that you need to watch out for, which has been a very consistent trend in the bull market so far, and those guys that know my partner in the Discord's Dario, he's been trading these sort of setups very well recently. It's just the wick-off reaccumulation pattern, right? So this would be your buying climax. This is, your first sell-off, what we call an automatic rally, right? Push back higher, and then you come back down and you sweep the previous lows. So these two levels here, everyone panic sells, and you reclaim that level. And that if that happens, then you've got to flip your stance again, and you be looking to get long. So that's the things I'm always looking out for. Okay, we're in a really nice bull flag here. Does it get rejected, right? If it does get rejected, I want to either cover or I want to sell. And then if we put in a spring and then reclaim the key levels through here, I want to be getting back long again because I'm expecting it more upside to come, right? So Man is a good one that there's possible few trades coming up on. The really basic form of this setup here at the moment, though, if Bitcoin plays out its falling wedge and starts to push to the upside, I think that this will just play out. And you can get in anywhere in the flag pattern, but you'll be looking at for something like this, right? Get our targets from our Fibonacci. So if you want to be safe, take it from the previous swing low, and I'd be looking for around this 0.234 sats and 2.746 sats, right? So those are the two take profit levels that I would have, and that'd be a pretty big rally from there. You get another 60%, but look at Theta Coin, it just keeps flying. So I feel like we're starting to get to that time of the market cycle where things can just start getting absolutely ridiculous and keep going way higher before, I completely missed this one and I keep kicking myself. That is just such an easy setup, and I just didn't see it because it's hard to catch everything. But, this is sort of similar structure to what Man is in at the moment, just a different type of bull flag, and then break out, come back and retest the previous swing high, and then just absolutely moons, right? So especially at the moment, all you need is a little bit of good news, and these things can just go absolutely crazy. Like that push is 91% in how long? 3 days. It's like, and this is a coin that's already pushed, absolutely astronomical amount from last year, right? Like, look at that chart; it's out of control. So
yes, people and traders are looking for those narratives, and when they fit the narrative, if it's a coin that's been unloved, a lot of money flows in all at once from traders and investors. And once again, a liquid markets, you can see price and market cap absolutely boom off very relative few dollars actually invested.
Right. So this is another example of what I've been talking about, and you guys can go back and have a look at the last few collective shift videos. And while this was actually live and playing out, I had this chart set up and drew it on, and we sort of had just reclaimed. So this is the same thing. We're going sideways in this channel, and so this is your selling climax, automatic rally, second test. You have another automatic rally, second test, phase B. The last rally, then you come down for the spring. You take out everybody's stop losses all through here, and everyone starts to panic sell, right? Then you reclaim this level, and it's just the way that the market plays out, especially in these cryptos at the moment. So this was sort of your prime entry, either one of these this week below and then close back above, or coming back down to this same area. And then, we have a really nice rally from there. It's up 38% since the last test. And so what we want to see is this bull flag play out like it has, then push again, and then we want to see it retest the range high and put in another bull flag either below it and then push, or flip the range high into support like this, which is similar to what we just saw Theta do, but that was just on a bull flag. But it's the same idea. It's just a key level, support, resistance, flip, buyers come back in, who have taken profit. Maybe people who bought down here, they sell, once we break to a new range high, then they're buying back again here for the next leg up. And I would expect IOTA, it's Roman's favorite coin. He's always talking about and shilling it to us in our group chat. But, there's a lot of strong fundamentals supposedly coming out. So it should have good news events coming up, which could get a bit more excitement in this coin and push it up at least to this 58.62 level. I think is probably a pretty decent target, which is a fair amount. It's still upside because, that's a 90% push versus Bitcoin, and who knows if Bitcoin is staying strong, keeps pushing higher, that could be a couple of 100% easily on the USD pair. So
fantastic, mate. Well, we've been going about an hour, I think, so we might wrap it up there. But that's been a good deep dive into a number of charts. Hopefully, all that macro stuff is really starting to make sense for those of you at home. So watching the DXY, watching the stock market, watching the Fed, because there's a big move coming, and I would love for it to be up and continue a nice healthy bull market. But things could get nasty pretty quickly if the Fed hold firm for the first time ever. So, any final thoughts, Kyle?
Well, what you just said, if the Fed stops playing ball and, we see the stock market start to crash, that's got to be warning signs on for the Bitcoin market. And if we start to invalidate these bullish setups that are everywhere, that's got to be your first warning sign that, we should be taking profit or hedging by shorting on futures, and, looking to make sure that we're not fully exposed in those moments. So that for me is the biggest warning sign when you have a really nice bullish setup and it gets rejected, because if you're still bullish, it should play out, right?
Yeah.
So
and
that's what I'll be looking for.
Also, when good news stops pushing the market higher for individual coins or the whole market, again, that's something that makes me very cautious. So hope you guys have enjoyed that one. For members, be sure to check out Kyle's reports and his daily TA posts. They've been great lately. So thanks for joining us, mate. We're going to try and do this probably monthly, so be sure to let us know any coins that you want covered or macro themes or whatever, and we'll cover those next time. So cheers, guys. See you, mate.
Awesome. Thanks, guys. See you soon.